Good afternoon, everyone. Let's wait for 1 minute, then we shall start this class. Whether I'm audible, if you can hear my voice clearly, just tell me in the chat box. Okay, let's start this class. Okay. So as you can see from the session itself that we'll be covering the part 3 of July. Okay. So yesterday, since our document contained details about 11th to 31st July. Okay. Yesterday we completed news. Apart from the circulars or regulatory news, we covered general economic news, okay, and general finance news. But in this session, from 11th till 31st July, whatever circulars regarding RBI, regarding SEBI or regarding IRDA that has arrived in the month of July, we will cover in this session, okay. So let's start our class, okay. This class will be short because not more circulars are there, okay. RBI sets for lenders on CBDC as well as unclaimed deposits. CBDC you all know, central bank digital currency, okay. So what RBI is actually doing, it is actually trying to adopt an approach of target based, okay. So usually what happens in ministry, all the departments usually have some target to achieve, okay. So such RBI is considering to put it or to utilize it on the banks in context, in specific context of central bank digital currency. As you know, central bank digital currency right now is in pilot phase because RBI is actually trying to implement and see what is the impact of central bank digital currency on the whole economy. So that's why it is adopting target based approach for CBDC. And what will happen in target based approach? So RBI will give target to all the banking entities to do some number of in CBDC, okay. And we will see what is that number actually, because until or unless the customers do transactions in CBDC, RBI will not get to know what is the impact of CBDC on the whole economy. So that's why RBI has trying to adopt this approach and mandated all the banks million transactions a day for CBDC by the end of the year, okay. So remember this target, this is important, and this is the data with respect to how much people, how much individuals as well as how much merchants have already incorporated or adopted CBDC. Over 1 million users as well as 262,000 merchants have registered for pilot on retail CBDC transactions. RBI sets target for unclaimed deposits. So unclaimed deposits, as you all know, the threshold or cutoff time period is 10 years. So what do we mean by unclaimed deposits? There is a specific definition with respect to unclaimed deposit is there, where amount under savings account or current account, and this is demand deposit, also term deposit. So amount unclaimed in such accounts for 10 years and amount unclaimed after maturity of these term deposits, 10 years after maturity of this term deposits. If it is unclaimed, then these amounts are termed as unclaimed deposits. And what happened about these unclaimed deposits? Where does these unclaimed deposits go? Do they continue to remain with the banks? No. They actually are transferred to Depositor Education and Awareness Fund, and this is maintained by Reserve Bank of India. Okay, and if you see the amount of funds that are actually within the banking system unclaimed, you'll realize what is the amount of corpus it's there. See, 1.44 trillion rupees unclaimed is present in the banking system. So you can see the magnitude of it. Okay, and recently RBI launched a campaign regarding unclaimed deposits. Does anybody know what that campaign was? If you know, you can put it in the comments. Otherwise, I'll tell. Is anybody aware of that? What is the campaign launched by RBI in context of unclaimed deposits? This was the campaign. Okay. So you may want to remember this. Okay. So this is all about unclaimed deposits, and as you can see, the corpus is 1.44 trillion and 1.22 trillion of that whole corpus is with public sector banks. Okay. Whereas private sector banks has a very limited amount of unclaimed deposits. Let's go to the next news, which is about RBI's Digital Payments Index. Okay, so as you can see the importance of this index, because in recent RBI paper, phase 1 paper, the base year was asked in phase 1. Okay, so you have to learn current value, base year, when it was launched, when it was announced. So it was announced in 2020. Okay, in February, when RBI in its monetary policy committee statement mentioned that we will release RBI Digital Payment Index, and since this Digital Payment Index talks about the digital penetration of various financial services, so as you can see from the data itself that it started with 100 as the base and current value is almost 400. So 4 times the digital penetration has increased in the country. Okay. And apart from all these details that we have just discussed about Digital Payment Index, we will see what are the various parameters associated with Digital Payment Index. So we need to remember these things also, and also the weightage about it. So Digital Payment Index is calculated on the basis of these 5 broad parameters. Okay, which is first of all payment enablers, payment infrastructure demand side, payment infrastructure supply side, payment performance, as well as consumer centricity. As you can see, the weightage of payment performance is the highest, then enablers, supply side payment infra, demand side payment infra, and consumer centricity. Okay, so this is all about digital payment index. So let's move on to the next news. This is about RBI Master Circular on management of advances by urban cooperative banks. So this is various rules and regulations given by RBI with respect to urban cooperative banks and their lending. Okay, so we'll see various provisions based upon which UCBs have to act. Okay. So first of all, it is saying that these are the guidelines for credit dispensation, that means credit disbursal, loan sanctions, okay, and this has to be done keeping in view the credit exposure norms. So what do we mean by credit exposure norms? These norms differ in terms of to whom you are giving credit. For personal loans it will be different, for industrial loans it will be different, for priority sector loan it will be different, okay. And lastly, whatever loan policy that the bank will formulate, it should be reviewed by the board at least once in a financial year. So these are the basic conditions which RBI talks about in its master circular with respect to advances by UCBs. And now we will talk about what about rate of interest upon the loans that UCBs can undertake. So UCBs are actually free to set or determine their lending rates, but obviously there will anyways be what conditions they need to be incorporate before determining the lending rates. That interest rate charged by them should be transparent and known to all customers. They should not be vague. Okay, so if they are providing 12% lending rate for personal loans, they should put that in their website or somewhere so that all customers know about these things. Okay, and in case of loans to borrowers under priority sector, so priority sector, all of you know, it refers to women, farmers, renewable energy sector, MSMEs, even startups also. Okay, if they are giving loan, if the banks are giving loan to these priority sectors, no penal interest should be charged for loans up to 25,000 rupees. So if they are giving loan of 25,000 rupees and if there any delay with respect to repayment of that loan, RBI is saying there should be no penal interest rate levied on that portion. Okay, next is disclosure norms, and this is essential from the perspective of Reserve Bank of India, because as you already have heard about, various cooperative banks actually got bankrupt because of various scams, or because of various loan defaults. Okay, so to establish a very robust regulatory atmosphere, RBI says that if all the doubtful loss or suit filed loan accounts, in total the sum of which amounts to 1 crore, then the details of such account should be given to RBI. Okay, so this is simple. And any account that had a loan of more than 25 lakhs and it is not repaying that loan, the details of such account should also be given to the Reserve Bank of India. Okay, so these two conditions are important. Please remember these details: 1 crores in aggregate and 25 lakh and above individually. Okay, so these are the disclosure norms given by RBI's master circular for UCBs. Let's move on to the next news. This is RBI's bulletin of July. It usually contains the details about state of economy and various indicators and their values. Okay, so state of economy, RBI is saying, as we have discussed yesterday, that global growth momentum appears to be stalling because, as you know, because of the rate hike tightening, okay, by Federal Reserve, by central banks. So the global trade is slowing down, reducing, okay. Also, market expectations of future interest rates have gone up. So most of the market participants are right now saying that the policy rate determined by central banks will actually go higher. Why do they are thinking like that? Because as you all know that recently, because of food prices as well as fuel prices, inflation has reversed its trajectory of going down and it has started rising again. So to reduce the impact of inflation, central banks will inevitably increase the rate hike to absorb the liquidity conditions and contain the inflationary pressures in the economy. Okay. Next is overall balance of payments. Situation has actually improved because, as you all know, since global trade has reduced, then obviously imports and exports obviously will reduce, and ironically, as discussed yesterday also, imports in our country reduced steeply much more than exports, then obviously the balance of trade is actually in positive manner. Okay, so this is the condition given under this. Next is RBI actually talked about India at the rate 100. So what are the conditions upon which RBI says this article provides an indicative roadmap for India to become a developed nation by 2047-48. So the aim is to become a developed nation by 2047-48. Okay, so India's real GDP must grow at 7.6%. Okay, for the next 25 years to achieve per capita income level of the developed nations. Okay, and what else? India must rebalance its economic structure. And why do we talk about rebalancing its economic structure? Because as you all know, our services sector is the highest, and then our other two sectors, agriculture as well as manufacturing sector, are very less, okay, compared to developed nations where all the sectors, especially manufacturing, is robust. Manufacturing is usually associated with export performance, as evident in the case of China. Okay, so we need to increase the sectoral share of manufacturing sector. Okay, so let's move on to the next news. So this news is about the details of deposits with scheduled commercial banks. Okay, so in this we will talk about various types of deposits. First of all, the deposits with scheduled commercial banks actually grew by 10.2% during 2022-23. And out of total deposits, senior citizens contribute about one fifth of the total deposits. So as you can see from the data itself, senior citizens' share in total terms and saving deposits stood at 22.2%, 21.3%. Savings deposit and total term deposits, I hope you understand the differences. Term deposits means your FD or PPF account, where the deposit is for long-term maturity, whereas savings account is short-term account where you can withdraw money at any time. Okay. Next, data is about share of female senior citizens in the total deposits. Okay, it stood at 7.2%. So this is a very good contribution. Okay, because we are talking about female senior citizens only, not female whole citizens. Okay. And what about the contribution of female customers in the total deposits? It actually increased to 20.5%. Okay. And next is the share of term deposits. As I've already told you, FD, PPF and other things. increased to 56.9%. So that's actually a very good phenomena for the whole economy, because whenever term deposits are higher than the savings deposit, you can rightly say that more funds are available for long-term growth of economy. Okay. Let's move on to the next news. Next news is about SEBI introducing new mutual fund categories in context of ESG funds. ESG meaning environment, social and governance funds. What do we mean by ESG funds? So ESG funds are usually such mutual funds who invest the amount of money collected from customers and invest them into various industries working in these sectors. Okay, so this is all about ESG funds. Usually such funds attract tax incentives. Okay, and such funds are very critical for India's economy, because we have various targets with respect to transitioning into a greener economy. So to go into a greener economy, we need companies that involve in the green sector, and such companies also need funds. Okay, so if we have a dedicated fund, mutual fund category that actually invest in such companies, that accessing fund by those companies becomes very much easier. Okay, so usually what happened earlier was there was only one type of ESG fund. So any mutual fund company, be it of HDFC mutual fund or ICICI mutual fund, they'll release just ESG fund. Okay, but right now whenever any mutual fund have to put out ESG funds, they need to categorize it into these types of funds. Okay, so first, exclusion fund, integration funds, best in class positive screening funds, impact investing fund, sustainable objectives fund, transition related investment funds. And these are just like that categories, because what do we mean by categories when we are discussing about them? So usually categories are like in mutual funds, you must have heard about equity funds and debt funds, hybrid funds which invest in both equity and debt, and within equity also small cap funds, mid cap and large cap funds. Okay, so these are the categories of mutual funds. Similar to these, ESG categories have been provided by SEBI. Okay, so I hope you understand these things. Nothing very much difficult in this. These are just names of new categories. Okay. Next is PAN trading account freeze extended to all listed funds. So what SEBI is right now doing, as you all know, there is a very big issue of insider trading. Most of the complaints of that SEBI investigates within a year comprises of complaints of insider trading. What insider trading is? When the company executive knows about company's confidential details that all general public doesn't know, and then invests in order to gain profit. Okay. So to avoid insider trading, what SEBI is actually trying to do, so as you know, quarterly results every company gives. So suppose the quarter is from April to June 30. So from June 30 till suppose July 8 the company releases its quarterly results. So from June 30 till July 10, that is 48 hours after company releases its quarterly results. Till this time, the PAN account of chief executives of the company are freezed so that they don't get involved in trading their own company's stocks. Okay, so all the details of this whole circular is related to this only. Okay, so I hope this is very much understandable to you. And what right now actually happens, so Sensex and Nifty 50 index, companies listed in Nifty 50 and Sensex are only those companies this provision used to be applied. Okay, and such index only get limited amount of companies, but the whole NSE and whole BSE Sensex contains of various listed companies. So SEBI is actually trying to extend this application to all the companies listed on the stock exchange. Okay, as you can see from the SEBI's annual report, most of the investigations by market regulators were related to insider trading, and this is 29% investigations. Okay, so this is a very big number. Let's move on to the next news, which is related to internationalization of rupee. Every month we are actually seeing that India is actually trying to sign a various rupee or local currency agreement between different countries. In yesterday's session we discussed about Bangladesh and India actually talking about doing trade within their local currencies. Similarly, this agreement between India and UAE is all about this. As you can see from the agreement itself, that they are actually trying to establish a framework to promote the use of local currencies for cross-border transactions. Apart from that, they are also trying to interlink their payment and messaging systems. So payment systems, in India we use UPI, in UAE they must be using some payment system. So if we link those payment system, then obviously bank accounts within UAE can easily transfer to Indian bank accounts. Okay, because this platform is interlinked, then obviously the transactions between two bank accounts or two currencies becomes very much easier. So this is the base. If we have a base of local currencies, then upon this base we can actually connect our payment systems. And similarly, these messaging systems, these are not WhatsApp like messaging system, these are financial messaging systems, okay, that banks use. Messaging systems. Okay, so don't get confused, these are not WhatsApp. So let's see what else is there. So creation of local currency systems, exchange systems would enable exporters and importers to invoice and pay their respect invoice. So this is nothing but what they are saying is, if a local currency exchange system will develop, then obviously exporters and importers within those companies or within those countries can pay or can do the trade in their respective domestic currencies. Obviously this will establish the foreign exchange market between India and INR and UAE's currency. Okay, it will promote investments and remittances also. And similarly, this is the thing which we were talking about, that linking their payment system. So fast payment systems, UPI and instant payment platform of UAE will be linked. Similarly, card switches such as RuPay of India and UAE switch of UAE. So if card systems also get interlinked amongst each other, then we can, if we have a RuPay card that all Jandan account people gets, so RuPay card can be used in UAE to do transactions. Okay, so in this manner the fintech economy is actually right now growing, and as you can see there is huge amount of applications that the fintech economy is providing us, even in such amount that we are actually getting various choices with respect to how to do payment. Okay. Next is RBI to give banks guidance to resolve rupee trade issues. So in this context, actually what RBI is saying, between India and Russia, as you all know, both these countries have already had an agreement to settle their bilateral trade through their local currencies. So most of the defense purchases that India had already done and the Russia was given Indian rupees. So most of the Russian banks have huge amount of Indian rupees piled up over there, and Russia is actually talking with India to resolve this rupee accumulation issue. So they are actually doing what? So they are trying to exchange billion of rupees accumulated in banks of Russia for other currencies. And to resolve this issue, RBI is actually providing guidance to banks. Okay. Next is a basic thing. SEBI is actually trying to set up a panel to suggest changes to SECRA Act. This is Securities Contract Regulation Act. The act is of time before SEBI also, because as you know, SEBI was established in 1992 and this act is very old, 67 years old. Okay. So what they are doing is they are trying to establish a panel so that that panel can actually review the SECRA Act and remove the redundant provisions and make it much more dynamic, catering to the current economic realities. Okay. Let's move on to the next news. Central Bank, RBI, seeing bank retail loan book more granularly. So this is nothing but the details about bank credit growth in context of retail loans. Okay. So let's see the details with respect to this, because as you know, the details or these primary key things are important in context of various regulatory examinations, because IBPS is very much fond of these technical details. Okay. So just remember these key figures, these do help in the examination. So bank credit growth actually registered a 15.5% growth, and although these things usually come every month, but having knowledge about these things, or having just a brief or subtle idea about some growth percentage, then you will be much more appreciate the data that comes under financial stability report, because if you know these things, such things only comes under financial stability report, and then this report becomes very critical for the RBI examination. And then students say that how to cram such amount of data, but if you have idea about what data are important, then remembering data from such reports becomes much more easier. Okay. So what we are trying to do is make things easier for you, or make things at least methodical for you, so that you know or you do preparation in a process. Okay. So as per latest RBI data, growth of retail loans was 19.4% until April 21-23. And within retail loans, credit card outstanding grew by 29.7%. As this was evident in the yesterday's session, that we saw that how much credit card consumption is actually very high on account of various benefits provided by such credit card companies. Okay. Next is bank loans to NBFC also grew by 29.2%, and lastly personal loan segment also grew by 24%. So what did we learn from this data? Apart from the growth rate, we also learned that retail loans are important, bank personal loan segments are important, also credit card outstandings are important. And apart from, whenever we see any details about any types of loan, then remembering data about these types of loan becomes important, and these types of loan can easily come in the examination. Let's go to the next news. So next news is also similar to the first news that we discussed, that CBDC QR code to be made interoperable with UPI by the July end. This is what the Deputy Director is saying, Deputy Governor of RBI is saying. So what is the of CBDC with UPI? I'll explain. Okay, so just try to understand this. So assume CBDC like a digital cash that is transferred from one CBDC account to another CBDC account. CBDC B, you can say CBDC A. Okay, so this is the modus operandi of central bank digital currency. Okay, and this is the whole crux of central bank digital currency. How it is different from UPI? Because as you know, CBDC is digital cash, UPI is a transaction platform, you can say, through which rupee from ABC bank account, okay, gets transferred into another EFG bank account. Okay, here the involvement of banks is there, but in case of CBDC there is no involvement of bank. Direct transfer of rupee is there. Similar thing happens with you when you go to a retail shop and then you ask for a packet of biscuit, then you hand over the cash to him. So similar will be the case in case of CBDC. So the CBDC will directly be transferred into another person's CBDC account, where the amount, where the value the person is getting is the same cash only, rupee only. Okay, but what if obviously you will be wondering, what if this person B doesn't have CBDC account? Then how we will transfer CBDC to another person's account? That's when the concept of interoperability comes. So the RBI is actually saying, if any person doesn't have CBDC account, then we will make a QR code through which CBDC can be transferred through UPI to another person's bank account. Okay, so I hope this is very much understandable, that what is the concept of interoperability, why it was needed. Okay, so this concept of interoperability, as you all know, started with when people had Paytm wallet, PhonePe wallet, then came one single QR code that could easily transfer amount into any person's bank account irrespective of what wallet he or she is using. Okay, so similar will be the case under central bank digital currency. So let's move on to the next news. Next is very generic news. Central Bank Governor Shaktikanta Das is saying to all bank CEOs to focus on governance. Very basic news, that they should focus on tripod of banking stability. So this is very important because compliance, risk management and audit functions, okay, these are the tripod of banking stability. Such statements can be used under descriptive answers, okay, because this will give you edge. So not every news is related to for MCQs only, you should take some things for descriptive also. Next is quarterly data with respect to credit of scheduled commercial banks. Okay, so the growth rate of bank credit in March actually came to be 10.7%. and all population groups maintain double-digit credit growth. Personal loan segments have been driving the overall bank credit, recorded 19.7% growth. Okay, and the most important thing, Maharashtra maintained the highest share in total bank credit. So Maharashtra came out to be the state which took most amount of bank credit. Okay, let's move on to the next news. Reserve Bank of India call and notice and term money market directions. So money market, you know, these are short-term markets, and in money market, call money market, under call money market, the lending is usually done for 1 day only. That within 1 day, another bank lends or another bank repays the loan. In notice money market, the term is usually 2 to 14 days, okay, within which lending and borrowing is done, and in term money market, it is more than 14 days. Okay, so I hope this is understandable for you. Next is guidelines on digital loss, default loss guarantee in digital lending. So as you all know, there are various applications that have recently emerged that provides a loan of approx rupees 1 lakh rupees to various customers, okay, without any KYCs and without any various formalities that usually bank does, without any collateral. Okay, so in such case, if that person defaults on that loan, then what will such lending service providers will do? Okay, so to protect them from default risk, RBI is actually planning to provide a default loss guarantee. Okay, so RBI says that all lending service providers to regulated entities must have a default loss guarantee provisions, under which 10% of the total outstanding loan, that means all total loans, is protected. Okay, so suppose if 5,000 rupees loan is outstanding or given to the people, and if all of this defaults, then at least 500 rupees is saved or given back to the banks. This will obviously give them a bit of cushion so that they do not get insolvent. Okay, and this RBI says all regulated entities must put it in the contract whenever they are doing with lending service providers. Regulated entities you all know, scheduled commercial banks, NBFCs, any entities that provide lending loans, and if they are lending their money through lending service providers like various lending applications, they must have a contract of default loss guarantee with them. Okay, let's move on to the next news. Last news, this is about sovereign gold bond scheme 2023-24. So this news is just about that they are actually trying to provide sovereign gold bonds under 2 series, and this series will be done from June 19th to 23, September 11th to 15th. As we had discussed yesterday also, that sovereign gold bonds are nothing but government bonds denominated in gold. For example, usually governments or bonds are denominated in current rupee, such as 10,000 rupee bond. But sovereign gold bonds are denominated like 10-gram sovereign gold bond. Okay, so to get such bonds, okay, but this bond acts as a gold substitute for gold, and the value of sovereign gold bond will be changed as per the amount or the value of gold will change. Okay, and in the end, when the bond will mature, then the value that you will be of current gold price. Okay, so suppose initially you bought 10-gram sovereign gold bond of, suppose right now, 50,000 rupees gold price, but in 2030 suppose gold price become 70,000 for 10 grams, then you will, after cutting some deductions, get around 65 to 70,000 rupees. Okay, so this is sovereign gold bond, and this is the scheme that government to make this as a substitute for gold. And the aim was to reduce the import bill, because most Indians actually import a lot amount of gold. As you all know, in our country gold is a substitute of saving instrument. Okay, and individuals and even institutions are allowed to invest in such gold bonds. Okay, for individuals the limit is from 1 gram to, okay, so remember this. So this is all from my end. If there is any other confusion from your part, please do tell, otherwise we will wind up the session. Okay. So thank you all for joining. Thank you so much.